And when Mr. Brown says that there are no real problems in Britain, that we are a model of stability and good regulation under Labour, why then, Mr. Brown, have we had to publicly rescue 2 banks already? Why are the regulators now, rather late in the day, a year or more late, getting involved in mergers and possible solutions for other banks, which we hear may also be at risk? And are you really saying, Mr. Brown, that you now believe that all the damage has been done, that everything has been sorted? The second proposition that the government, I think, is getting wrong is the proposition which says that there is nothing wrong with our banking and financial system that a little bit of extra regulation wouldn't put right. The question we have to ask as defenders of free enterprise and freedom is this: why has the crisis occurred in the most regulated of all the industries? What were those regulators doing over the last decade when these banks built up these extraordinarily large positions, lending people and companies so much money? What were the regulators doing when a limited number of extremely rich bankers made huge bonuses on the back of this massive credit explosion? What were the central bankers thinking about when they kept interest rates so low, tipping petrol on the fire in the period 2003 to 2006? More worrying still, what is the Bank of England and the European Central Bank thinking about today when it is making the opposite mistake? Whereas in the middle part of this decade, they kept interest rates too low and they encouraged the bankers to lend foolishly, today they are keeping interest rates far too high and they are discouraging anybody from lending anything. My first non-partisan point is please government, understand that today we are not fighting inflation. That will be nailed next year. There will be no inflation. We are fighting recession. And will our authorities, will our central banks realize that now is the time to do everything in their power to try and limit the downside damage? The building industry is already imploding because of the state of the mortgage market and the housing market. We're beginning to see it going over into other service businesses. What is going to happen next is the banks in Britain and the banks in Europe are going to have to withdraw lending facilities from small and big businesses alike. They're going to have to cut the amount they're lending to them, and they're going to have to put the price up. And if the Bank of England and the European Central Bank keep their rates in the 4 or 5% range, people are going to be paying 4 or 5, 6 points over that starting point. If the Bank of England and the European Bank would get their rates down to the 2 that America has thought more appropriate for these conditions, you're still going to have to pay a lot for your borrowing, but it does operate off a smaller base. So we need banks that understand that the next stage of the crisis is that the loan crisis, the credit crisis, fans out from the banks because they're in a weak financial position into the markets generally, and it will start to affect every family in the country one way or another. It won't just be the young person in the family can't get the mortgage for the first flat or house. It won't just be that the parents can't borrow a bit more to buy the bigger family house they want. It won't just be that the company can't borrow a bit extra to put in the extra capital equipment it would like to put in. It will be banking facilities withdrawn from companies that need the banking facilities to maintain their employment. It will be banking and credit facilities withdrawn from people who need it on good covenant for good reason, just to keep their daily activities going. This is a very serious crisis indeed. So what should they do? The first thing they should do, they may be doing some of it, I wish they do more of it more quickly, is behind the scenes, without telling us, without talking to the press. The regulators in Britain should be in contact daily with every major bank and should be drawing up with them plans so that those banks can raise from the private sector more capital. Most banks need more capital. That is what the market is telling them. That is why the share prices are down. I know it's not easy raising capital in this condition, but more capital has to be raised. And I don't want to see every bank ending up nationalized with the taxpayer as the shareholder of last resort. They have got to try and get the markets meeting their obligations and putting more capital into those banks. I think they may, as regulators, have to recognize that at the moment the market in many of the loans and mortgages that the banks own as their assets is just not functioning. People are scared, there is no real market, and this idea that you carry on marking to market, as they say, making the banks write their assets down and down and down because nobody wants to buy them, is now a kind of madness. Now you get no stronger defender of the market than I. You get no stronger defender normally of the principle of transparency and telling everybody that this is the market price and this is what it's worth. But there is no market. And if you make them put in a price which is a nonsense, you just undermine the banks further. So we have to have a regulatory position for a month or a year or however long it takes, that we're going to have an economic value, we're going to try and judge how many of the loans are going to go wrong and how many are going to be good, and you relate the value to how many loans are going to remain good, rather than marking to market where there is no market. We've got to try and rebuild confidence somehow or other. Maybe there needs to be some kind of insurance mechanism. But what I hope people are now learning from the vote in Congress is the politics of it as well as the economics. Whatever the rights and wrongs of the Paulson package, whether or not the Paulson package might have been good economics, we now know today that it was lousy politics. Those congressmen and women did not vote against the package because they want to bring the world banking system into a worse crisis. They did not vote against the package because they want their long-suffering constituents to lose more money on the stock market in their pension plans and their savings plans. They voted against that package because they want to keep their jobs, their seats, and they know that middle America is seething with indignation at any idea that there might be public subsidy, public bailout, leaching into the hands of shareholders, senior directors, and highly paid executives. They know that the executives and the shareholder dividends took the cream in the good times, and they see no reason why we should be left as taxpayers with the damage in the bad times. And the package failed to circumvent that problem, and the politicians, Bush downwards, failed to articulate to the electorate why that wouldn't be the issue with this package, and so the package fell. And what a state to get into. The president loses his main proposal for tackling the banking crisis. The two presidential hopefuls, Democrat and Republican, back the package and go down with the president. Both the presidential hopefuls failed to deliver enough votes in their own party in Congress, although they signed up to it and were urging them to vote for it. That is because they'd all comprehensively misread the politics. I don't think the politics in Britain are that much different. I think people in Britain would be seething if they felt they had to go to the aid of many more banks in a way that could leach into management consultancy fees and rewards for people at the top of these organizations. That is not what someone in recession on a low income wants to be contributing towards. And if we are serious about controlling public spending, as I trust we are, we need to get a grip now in our words on this biggest and most threatening of public spending programs, the leach of our money into these packages and packages of debt. I opposed the Northern Rock nationalisation, pleased to say, with the party, because I passionately believed it was bad economics and bad politics. If you want to sack most of the people in Northern Rock, then nationalise it. If you want to make sure that what had been Britain's biggest lender for housing purchase can no longer lend any new money to anybody, then nationalise it. If you want to make sure that you maximise the losses on the loan portfolio, then nationalise it. If you want to make sure that the taxpayer for a very long time is paying enormous bills that it shouldn't be paying, then nationalise it, and that is what they did. We have already had a bill presented in the first half figures of the nationalised industry, 685 million of losses. I make a prediction that when the new chief executive arrives on the 1st of October, the first thing he will want to do is go through the books and write a load of it off. That will be another load of losses down to the taxpayer. And how are we going to handle this package coming in from Bradford and Bingley? Well, I'm pleased to say under fire from people like myself, they've at least tried to put some element of taxpayer protection in. But I'm going to want to read the detail and make sure they put enough taxpayer protection in, because I'm deeply suspicious. And again, I'm against the nationalisation anyway, because it now means that another mortgage bank cannot make new loans and will have to sack a lot of staff presumably at the taxpayer's expense.